Welcome back to Power Lunch. I'm Mike Santoli at the New York Stock Exchange. Check out Apple rallying today after CEO Tim Cook said China would refrain from targeting the company in the ongoing trade conflict. Stock now up more than 4% just this week. JC O'Hara of MKM Partners and Mark Tepper of Strategic Wealth Partners are your Trading Nation team to talk Apple today. JC, pretty good week, a little run off of the lows in the 170s for Apple stock, but it's still looking up at a couple of peaks above $200 a share over the last 8 months or so. So how does that shake out for you?
You know what, short term, we're definitely seeing some positives, but longer term, I think it's still in a very difficult situation. And this situation really reminds me of where it was at the end of November last year. Remember, we had a 20% pullback. We undercut the 200-day moving average. We had a little bit of an oversold bounce, but that bounce faded and we made new lows. So I think there's two key technical levels we really need to focus on here. The first is the 200-day moving average at 190, 192. If we get above that, I will turn incrementally more bullish and positive on the technical setup. Conversely, if we back and fill and undercut the June 3rd lows at 170, I think we need to get out of this position and exit Apple. So pay attention to those two levels.
All right, that would suggest not a lot of margin for error. Mark, what about on the actual business side, the fundamental side, how this stock is now valued at a discount to where it was last year? How would you be playing it, if at all?
Well, I mean, the main issue right now is this China threat is real. I mean, they're making some power moves right now, and the ultimate power move would be to ban iPhones. Now, if that happens, this thing goes down to 130 bucks. However, I think that's a low probability because we'd basically be at war at that point, and China would be putting their own citizens out of work. So it's concerning, but unlikely. As for all the talk about the App Store and the high developer fees, I think it's a lot of noise. Either nothing happens with that or it takes years to play out. Long term, we still like it. They're doing well transitioning over to more of the service-based model. And the deal with Qualcomm ensures they're going to have that 5G phone next year. So I think once we see some progress with China, the stock's going to rip.
Yeah, pretty extraordinary, actually, for Tim Cook to express that much confidence that Apple will be spared if, in fact, things get a little worse over there. So we'll see how that all plays out, guys. JC, Mark, thank you. And for more Trading Nation, head to our website or follow us on Twitter at Trading Nation.
There's a classic investment thesis called the Dow theory. It says that transportation stocks can either confirm or deny a broader market trend. But it's important to remember that transports can be sensitive to changes in oil prices and other market influences. So don't rely exclusively on this theory when making an investment decision. I'm Randy Frederick, and Schwab is the better place for traders.